Hey guys, Jared Wesley here of Live Traders, and I hope you guys are doing well. It is Wednesday, which means it's time to upload another educational video. Every Wednesday, guys, I do a lecture. I usually upload it on YouTube. They last between 30 and 60 minutes, and this week's topic is multifaceted. This week's topic, guys, I talk a little bit about how I took a $2,000 account and turned it into over $50,000 to $100,000 on multiple occasions. And on top of that, I also talk about the 3-bar play in great detail. It's one of my favorite patterns that I trade with. You don't want to miss that. And also, one more topic, guys. I talk the truth about trading, okay? None of this marketing stuff. I'm not trying to sell you a course in this video or anything like that. So the video starts off a little bit slow with just me talking for the first 5 or 10 minutes, but you want to stick around because the information gets really, really good. Why most of you guys are failing as traders, okay? I go in great detail about what the problem is, not only in the industry, but with most traders, this get-rich-quick mentality. You guys want to trade without a trading plan, etc., and so forth. So it's about a 45-minute video, guys. Stick around all the way through the end because I think the information is great top to bottom. And one more thing, if you haven't already done so, go to livetraders.com and download this free ebook, Trader's Guide to Success. It's a free ebook. I will put the link in the description to make it easy for you. You'll get an electronic version of this. Guys, it's really good information. 85 pages. It's not marketing. It's not fluff. It's really good trading articles. Talks a little bit about trading plans, patterns, trades we've taken, etc., and so forth. All right. So check out the video, guys. Check out the free ebook. I hope you enjoy. Let's get to it. Okay. So like I said, guys, this is part of a lecture I did a while ago on how I made 2,389% in 1 year with this particular pattern. I'm going to talk a little bit about the 3-bar play, but I'm also going to talk a little bit about trade management, having a trading plan, and why a trading plan is important. Those types of things are things that I don't know why, but traders just overlook. And one of the biggest things, before I get started in this, okay, one of the biggest things that I see as a problem in this industry is the get-rich-quick mentality and the I'm not going to treat it like a real business mentality. Okay, perhaps that's part of the get-rich-quick mentality. So you have a lot of traders coming in, and if I'm talking about you or stepping on your toes, I'd say I'm going to apologize, but I'm not going to apologize because you need to hear this. This attitude, this idea that you can have a $1,000, $2,000, $3,000, $4,000 account and make gazillions of dollars overnight is ridiculous. Now, I'm going to show you how I took a $2,000 account and made a ton of money with it, but there's a big caveat that I'm going to talk about it, okay? Because I prefer people not do that. And on top of it, why should trading be different than any other business you've ever done in your life? Seriously, it's an honest question. Why should it be any different than any other business you've ever done in your life? Okay, you know why people come in, and I'm part to blame for this too, I'll admit that. Marketing, right? I mean, you see the money stacked up, you see the whiskey on the shelf, all that good stuff, and people are like, ooh, I want that too. But you need a little bit of a reality check, okay? Everybody wants nice things in life. That's just life, right? I mean, or if you don't want nice material things, perhaps you want freedom and flexibility in life. That's just kind of what people go after. You either want the freedom and flexibility or you want the material things, or perhaps you want both. But the problem is, guys, and I want you to think about this before I really dig into this. If you could make a living in 1 to 2 hours a day, genuinely 1 to 2 hours a day, I mean like 9 a.m. to 10:30, that's an hour and a half, 1 to 2 hours, right? If you could make a living in 5 to 7 hours a week, all right, and I mean a decent living, 100, 200, 300 grand a year, do you think it's going to be easy? It's an honest question. So most people out there, and I read a statistic a couple years back, and the statistic was the average person who makes over $100,000 a year in America, the average person who makes over $100,000 a year works 60 hours a week. So now you all want to come in and you want to make that 100 grand or 200 grand or whatever your number is, and you want to do it in 7 hours a week. So you want to do it in almost almost 1/10 of the time that it takes other people to do it. Now, I'm not saying it's not possible. I'm just simply saying that if you're going to do that and the standard is 60 hours, what does that probably say, or what does that probably mean? It probably says and probably means this business is challenging. Not everyone is going to, quote, get it. Right? That's just the truth. So if you're fortunate to be in that category where you can make a living in 5 or 10 hours a week, likely you put a lot of time and effort into that. Okay, a lot of time and effort into this. So that's one of the themes that I'm going to carry through this discussion, because so many people get caught up in this number. Ooh, 2,389%. Okay, don't get caught up in it. Okay, because so what if you have a $1,000 account, you make $23,000. That's incredible, but 23 grand isn't enough to pay your bills, so it's not that great, right? Okay. For those of you who haven't ever been there, I'm only showing this because it's in the presentation. You should do yourself a favor and try to get to the exchange floor. All right, it's not what it used to be. As you guys know, I used to work on Wall Street years ago, and it was far more active, 15, 20 years ago than it is today. Mostly nowadays, it's filled with computers, and what you see there is realistic. Now, don't get me wrong, that's a picture that's later in the day, but the point I'm making is the floor is not as dirty as it used to be, and it's much cleaner and so forth. We took our mentorship students there a little while back, and it was a really great experience for everybody. But the point I'm making is the stock exchange floor, it's kind of like it's the symbol of capitalism, right? It's the symbol of what we do. Now, not everybody likes that, but it is what it is, right? And it's just a neat place to be. That's all. So if you ever have an opportunity to get to the floor, it's a pretty cool place to be. So let's dig into this, guys, all right? So when I say how we're different at Live Traders, you guys in the chat room and elsewhere already know these things, but I want to go down this list because I do think it's important, because it's what you need to focus on to be successful. We use technical charts. I'll give you an example. This morning, somebody sent me a message on StockTwits and said, why is Toll Brothers collapsing today? Right? Toll Brothers gapped up this morning, and they had really strong earnings today. And this person wanted me to give them a reason why Toll Brothers was selling off today, right? Why it tanked. And my answer was simple. I don't really know, and I don't really care. Why? We trade the charts, guys. The only time I really care about a news report is if it's right in front of earnings, meaning I want to know that earnings is going to happen so I can get out before earnings. Or if there's an oil or gas report coming up, I want to know about that so that I'm not in an oil or gas stock. But you just use technical charts. Now, you might look at this list and go, well, that's so basic. Yes, yes, and yes again. Trading doesn't have to be so difficult, guys. So we keep things really simple here. Do you notice we don't use indicators? We use a moving average, okay? And I only use a 200 period on the 60 or the daily. That is it. Why? You don't need anything else. You don't need stochastics or Bollinger Bands or Fibonacci retracements. I was telling somebody on the phone yesterday, there's 300 or 400 indicators, and they're all based off basically the same thing, price. So candlesticks represent price. So when I say we trade using technical charts, we use candlestick charts, those red and green things, because that is everything. You don't need anything but candlestick charts. So stop reading all the news. Stop looking at all the indicators, okay? Keep it very, very simple. We don't care about news. And this is a big one. Check this one twice, okay? Always take our stop losses. If you come into this business and you don't have an intention to take your stop loss, you should quit the business now because you're going to blow up your account. Quit the business now because you will, not probably will, you will blow up your account. This is a business that's all about money management. If you cannot manage your trading account first, you're not going to have any money left, okay? And I don't want to hear it, all right? What I mean by when I say I don't want to hear is I don't care that you have to pay the bills. I don't care that, you graduated MIT at the top of your... I don't care. The market doesn't care, so neither should you. Take your stop loss, meaning I don't care if you're brand new and you have a $10 million trading account. You're going to trade $5 or $10 risk when you're new. Why? Because you just don't know what you're doing. So you take all your stop losses. If you don't plan on taking your stop losses, this isn't your business. All right, I don't want to hear soft stops, okay? Or I let it go a little past, no. If you're at your full money management, for example, if your risk is $100 per trade and you're at $100 minus 100, you're out of the trade. Okay, if your risk is $70 and you're at minus $70, you're out of the trade. If your risk is $5,000 and you're at minus $5,000, you're out of the trade. Not $5,050, not $5,100, you're out. That's it. End of discussion. Anybody who tells you anything other than that is full of shit. Okay? If you need to give something more room, then you should have taken less shares and factored that in to begin with. There's not much flexibility here. Track all of your trades. If you don't track your trades, you're just hacking around. You're not treating this like a business. Okay? Name me a company on the planet, a successful one, that doesn't track everything. You ever see on the internet cookies? Why are they tracking you guys? Why are those cookies tracking you? Any idea? It's a rhetorical question. We all know why they track us. So they can advertise towards us so they can make more money. So if you're not tracking your trades, how are you going to make more money? Right? I don't know. That's a great question. Why do companies like IBM track everything? Why do professional sports teams track everything? I mean, you look at an NFL team, they have a staff of like 25 people, and half those people are analytical people. All right? Oh, in basketball, you know, when he drives to the left, he shoots 27%. But when he drives to the right, he shoots 52%. Well, gosh, now that I know that statistic, if I'm playing defense, I want him to drive to the left because he shoots half as good, half as well. Well, if you take buy setups and your batting average is 27%, and you take breakouts and your batting average is 52%, which one are you going to focus on more often? Breakouts. Especially if you have a track record of 500, 1,000, 2,000, 3,000 trades. You're going to focus on what works and eliminate what doesn't. If you're not tracking your trades, you're not a trader and you're a hacker. And you should either start tracking immediately or find a different business. Okay? You trade for money, we don't trade for ego. That's it. End of discussion. We don't come in just to push the button for the action of it. This isn't Vegas. This isn't gambling. We're not poker players. And I'm not saying that poker players are gamblers because I'll get a ton of emails on that too. Okay, my point is you trade for money. We're not saving the whales, guys. Said that to somebody on the phone yesterday, right? This isn't Greenpeace. We are here for money. That's it. You're not creating jobs by the stocks you trade. If you buy WTW over $20 today, you're not doing anything but trying to make money for yourself. Yes, it's a selfish business, but you chose it. So deal with it, okay? We're not perfect. You're going to make mistakes, guys. That's it. Get over it. Some days, occasionally, you're going to overtrade. Sometimes you're going to undertrade. Sometimes you're going to make decisions that are bad or based upon faulty information. That's life. The key is to try to get this to as close as perfection as possible, right? To try to sit there and say, you know what? I know I'm not perfect, but I'm going to try to be perfect, okay? Just focus on what's important, all right? Meaning if you want to make money in this business, treat it like one. Treat it like a business. I mean, you should really have everything in order, in place, and treat it like a genuine business. Basically, look at it this way. If you were working for somebody else, right, and they were watching you, would they fire you? The answer to that for most of you is yes, you would be fired. If somebody watched you trade and they watched you not track your trades and they watched you not take your stop losses, okay, they would fire you. So ask yourself, if somebody was watching me, would they fire me? The answer for many of you is yes. Okay. So guys, most traders fail because they don't have any idea what is expected of them, okay? What is required to succeed. Let me go over this briefly. I don't want to spend too much time on this slide because I have quite a few slides to get through here, all right? What is required to succeed? Education and guidance. Now, as soon as I use the word education, everybody immediately jumps and they're turned off and they're like, oh, I'm going to log out now. He's just going to pitch some trading course. I'm not. I don't really give a shit if you take a live trader's course or somebody else's. That's your own prerogative. It's your money. It's your business. Go do what you want to do. But if you're not getting some form of education from either a mentor or a coach or some other trading firm or something, reading a book, then you're stupid. Flat out dumb, okay? I'm not sugarcoating this. You're an idiot. Dumb. Yes, you heard me. If you're not getting some level or some form of education, if you think you, quote, know it all and you don't need help because you're different, well, let me explain to you. You're not different, and you'll just be like everybody else, and you'll fail. Okay? So you need some form of education and guidance from somewhere or somebody, whether it's one-on-one coaching, one-on-one mentorship, whether it's a trading course, whether it's, I don't know, reading 10 books on Google, whatever it is. but you need some form of education. It's going to give you a better understanding of how to make money. See, one of the things I have a problem with in this industry is there's a lot of charting education. That's great. Buy here, sell there. Great. But that's not necessarily teaching you how to make money. The money management side, the psychology side, the business side, okay? And as part of this education, after you get it, you should be able, the education should be good enough that you should be able to create a well-defined plan, right? The plan is your map to success. Think about this for a second. You can't just walk into a bank, walk into a Wells Fargo and say, hey, I need a business loan. Give me 500 grand. They don't sit there and go, oh, let me just check your credit score. Okay, all right, yeah, sure, you can have the loan. You have a good credit score. Is that how it works in the real world? No, it's not how it works in the real world. How it works in the real world is, show me your business plan. I don't know if any of you have ever tried to go to a bank to get a business loan for anything. They literally will say, well, show me the plan. And it's a process. It's a long, detailed process. They want to know that you have a viable way to pay them back. And if you don't, they're not going to lend you money. And that's why business loans are so hard to get, especially when they're unsecured. They're super hard to get. But hey, you're just going to trade from your house in your pajamas. You don't need a plan. You're different. Starting to see how you're not different, okay? So it's your roadmap to success. It's your plan. It's your idea of how you're going to make money, right? It's your proper tools to succeed. Charting software, adequate internet, tracking spreadsheet, defined goals, the patterns that you're going to trade, what those patterns look like. Do they have bottoming tails? Do they have topping tails? Do they have doji bars? Do they have increased volume? Are you going to buy them in a stage 1 or a stage 4 or a stage 2 or a stage 3, right? With the market, against the market, relative strength, relative weakness. All of those things are in your plan. How much money you're going to risk per trade. What your projection is, if you take 50 trades a month, how much you should make. Okay? And not only on top of all that, what is your money management? When will you quit for the day? After 1 loser, 2 losers, 3 losers? When will you quit for the day if you're winning? After 1 winner, 2 winners, 3 winners? Is it a dollar amount? What about at the end of the month? Let's say your goal is $10,000 and you're up 8 grand. Do you keep trading? Do you stop? What if your goal is 10,000 and you're up 15 grand? Do you stop? What do you do? All of that should be in your plan and well defined. Why? Because from my personal experience in this business, the more esoteric that your plan is, right? The more gray your plan is, the more you will take advantage of your plan in a negative way. Okay? Next, this is perhaps the hardest part on this entire list. Objectivity and humility. Guys, let's be honest. Let's just be honest here. We all have egos, and our egos trade for us occasionally. And when they do, it's almost always bad for us. Almost always bad. That's when you hear somebody go, yeah, I went on tilt. That when they say I went on tilt, that's code for my ego took over. Right? My ego took over. If your ego ever takes over, it's not going to be pretty. It's going to be ugly. Right? Ego, no, not me, not at all. I'm the most humble person there is. Sure you are. Okay, that's why you didn't take your stop loss. Instead of losing 1,000, you lost 10,000. We've all done it. We've all done it. The question is, did you learn from it? Okay, did you learn from it? So learn from your mistakes, never stop working hard, and let the market guide you, guys, because the market is right. You are not always right, but the market is. If you make a mistake, you just chalk it up and say, you know what, I was wrong. Oh my gosh, imagine that. Just throw your hand up and say, I was wrong. You know how hard it is to admit you're wrong? You better get used to it because you're going to be wrong at least half the time, okay? If you're a really great trader, you're going to be wrong 30 or 40% of the time, but that's still a lot, okay? And for all the married men out there, you're wrong 100% of the time, so this should be easy for you to accept, right? Anyway, kidding, but moving on. Experience, guys. You need experience to make money in this business. So you can get an education, you can get guidance. You can build a well-defined plan. You can have objectivity and humility, but until you get this last one, the money will elude you. You won't make any money, okay? Because you're going to need to learn through experience what your mistakes are. You can have all of the things above, but until you gain the experience of losing or overtrading or not taking a stop loss or making every mistake in the book, you're not going to be able to fix it, right? You have to make the mistake to be able to fix it. I'd love to tell you that, hey, you're not going to have to fix anything because you're not going to make mistakes, but that would be lying to you, right? So most traders, and this is a real serious problem, most traders' expectations exceed their experience. What does that mean? Your expectations to make 100 grand in your first year. Your experience, 0. Do you see how that doesn't match? That doesn't gel? Your expectation is $100,000 in your first year of trading. You have 0 experience. Well, that doesn't equal that. And we just talked about it, guys. Stop the marketing on Google. Stop listening to the bullshit out there, okay? $500 into $100,000 in 30 days? Lies. Pure lies. Run away when somebody sees that. If you see it, don't walk, run, and run fast. This is a long-term business that will literally take you years to succeed. Okay? Years. If you're not going to give it 1 to 3 years, don't start. I'll repeat. If you don't give it 1 to 3 years, don't even start. Okay? Give it a realistic timeline. That's it. Okay? Don't be greedy. Don't be naive. Work hard towards your goals. Stay humble, objective, and patient. All right? Okay. Why do you guys fail so much? We just talk a lot about it. Lack of understanding, high fees and costs with poor tools, not enough capital and terrible trade management, no discipline, and no safety switch. Think about all that. Think about everything I just put up there right there. You don't realize what it takes to succeed. We just talked about that. That's where the experience comes in. So you come in thinking in 3 to 6 months you're going to kill it. You're just going to rip it. Doesn't work that way. Not for 99.99999% of traders anyway, okay? High trade fees. Let's be honest. Commissions, platform fees, transaction costs are expensive. I mean, some platforms are free, but some platforms are $200, $300, $400 a month. Guys, trade fees. Some people say, oh, the fee is only $1 per trade, but then you have an ECN commission, at 30 cents per 100. All of a sudden, you have all these penny stock gurus out there trading 5,000 and 10,000 shares. Your trade fees become very expensive. Slippage becomes expensive. Your platform becomes expensive, right? Hard to borrow stocks. All these things add in. What I mean by that is sometimes you can't short the most perfect pattern in the world. It's not shortable, right? And that's a problem, okay? So if you can't short it, you can't make money off of it. If you have an unreliable platform, which I've dealt with a little bit here recently, but all of these things combined to do what? To make trading more difficult, right? So even if you have the humility and the discipline, and you take that perfect pattern, commissions eat into it, platform fees eat into it, slippage eats into it. Maybe you have all those things and the perfect short play, and you can't borrow it. Okay? Not enough capital and terrible trade management. Whoo, am I hitting a soft spot right here? Guys, look, I can preach to you all day long. Oh, go open yourself up a prop account for $2 grand, $3 grand, $4 grand, and you can go make a living off that. Yeah, you can after you've been trading about 5 or 10 years. Guys, the percentage of new traders that start with like $3 grand and actually make it, and that's all they ever started with, is probably like 0.1%. Okay? I'm going to repeat that. If I were to take every trader that's ever tried this business that started with $3,000, and that's all they ever had, they never added more to it, I bet you it's less than 0.1% who actually made it. Okay? Can you take 2,000 or 3,000 and make 50 or 100 grand in a year? Yes, you can. After you've been trading for 5 or 10 years, right? After you've cut your teeth. Why is that not that much money? Well, because if your platform's 100 or 200 a month, how long does 3 grand really last you? Even if you're a break-even trader, how long does it really last you? A year and a half? Well, that's not very long, right? So how are you going to make a living at $3,000 with a $3,000 platform? It's really, really, really hard. There's just not any flexibility there. There's just no room for error there. None. And when you're a new trader, you're going to make mistakes. Okay? So you try to make too much with too little. Terrible trade management doesn't help your lack of capital. I recommend most traders start with a retail account. Why? Because you need 25, 30 grand. All right? Now some go, oh my gosh, that's so much money. Well, then go trade Forex, where it's a bunch of charlatans. Not all of Forex. I'm just saying where you can open up an account with 500 to 1 leverage for $500. Well, that's a recipe for goodness. Not. You can open up a $500 account and get 500 to 1 leverage. Hello. Right? That's why everybody wants to do Forex. Because they're all broke. And they want to make something from nothing. They want to be able to make a living with $1,000. Okay. I just had that conversation with somebody yesterday on the telephone. All right? Literally, somebody called me up and said, I have $1,200, Jared. Can I pay my bills? I said, what are your bills? He said, I need to make at least $50,000 this year. I said, how much experience do you have? He said, I don't. I said, no. The answer is no. Didn't like what I had to say. What will that person likely do? Seriously, what will that person likely do? Go somewhere else? They're going to keep calling every person out there until they find someone who gives them the answer they want. And then they're going to blow their $1,200 and wonder what happened. Oh well, next. Churn them and burn them. That's the industry. Churn them and burn them. Okay? All these advertisements you see out there, it's churn them and burn them. Okay? No discipline, no safety switch, guys. Poor money management. What I mean by this is you don't know when to shut it down. You have to have money management rules. Okay? You have to have money management rules. All right? So, planning cycle of success. You're going to plan, put it all on paper first. You're going to, I always use the word try. You're going to try to implement your plan. Then you're going to measure the results. All right, you took 10 trades, measure those results, assess those results. Okay? See what happened during those 10 trades. So you measured them. Now review it, basically. Assess those results. And then make improvements, make adjustments. And you're going to go through this over and over and over and over and over again. All right? Until you get better. Right? Until you get better. Okay? So, daily routine. I'm going to go over this very quickly. Have a plan. Develop a market bias, pre-market. Higher, lower, neutral, not sure. Yes, there are days you're just not sure what the market's going to do. It happens. Check relevant news reports. Don't get caught up in the news. Just say, hey, guys, beware that 10:30, it's Wednesday at 10:30, it's oil report. Well, or 11, whatever it is, okay? I'm not going to be trading ExxonMobil or USO or any of those stocks. That's a relevant report, okay? Create a focus list of your favorite ideas. Scan your gappers, create a list, and then prioritize your list into your absolute top favorites. Today, BBBY was on that list, right? Why? Because it was a great gap, okay? CPB was on that list today, all right? WLL lower was on that list, right? That's prioritizing our favorites. We created a big list with 15 or 20 ideas and prioritized it down to our top 5. Put those lists in a thumbnail watch list. Be patient. Wait for your pitch. That sounds pretty simple, doesn't it? Guess what? It is. It's really, 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 really simple, right? It's really, really simple. But actually doing it, talking about it and doing it, that's where the disconnect happens, okay? So I want to spend just a little bit of time, guys, talking about 3-bar play. Many of you in here know the 3-bar play, but you know, you can use a refresher. Couple examples from the book and a couple examples from recently, okay? Why do I talk about this pattern so much, guys? Why? Because it's so damn easy. It's so simple, and I want you guys to have the simplest, shortest, smoothest, easiest path to success. And the 3-bar play is that, okay? It's a wide bar, a narrow bar, and blast off bar. And it can be a 4-bar play, which means you have a wide bar, 2 narrow bars, and then blast off. So it's a wide bar, it's a narrow bar, it's blast off, okay? But here's the key, here's the caveat. The wide bar must be breaking over some type of resistance or on a gap up. Meaning when you look to the left, there's nothing there. Look to the left and there's nothing there. Look to the left and there's nothing there. Why? We broke the $66 area. Resistance, sellers. Resistance, sellers. But now that we broke above that area, there's nobody there. Wide bar. Narrow bar is your resting period, right? Okay? Narrow bar is your resting period, okay? Then blast off, right? So in this case, we had two resting periods. Okay, wide bar, resting period, resting period. You're going to get in at 67.50. Your stop's going to be like 67, I don't know, 20. Wow, guys, I want $2.50. All right, $2.50 in 3 bars, 4 bars. You're not going to be waiting that long to get to target. That's another reason I like 3-bar plays. I am not a patient person, and these are instant gratification trades. If they don't run almost immediately, you don't want to stick around for them. This isn't a buy setup where it's going to wiggle and this and there and then eventually go. No, it's a hit and run trade. If it doesn't go in the first 2-3 minutes, you're probably going to want to tighten things up or just get out. Will you be wrong occasionally? Sure, right? Here's the bearish version of the same thing. Wide range red bar, narrow range bar. I don't care if this is a green bar or red bar. It doesn't matter. Narrow range bar can be any color you want. What is this wide range red bar doing? It's breaking below support. The stock is already in a downtrend, right? Lower high, lower low, lower high, equal low, lower high, lower low, lower high, lower low. Boom. Right under $314 right there. Okay? 15-minute chart, wide bar, narrow bar, drop. So you're in at $310.40 right there. Your stop loss is right above the topping tail, bar number 2, $312.40. It's a $2 stop. $2 stop. 15 minutes, you're down in the 305 range. So you're down $5. You've already hit 2 to 1 in the first bar. By the time it's all said and done, it gets almost near $300. So it's almost a $10 move. It is a $10 move. So you're getting about 4 to 1 on this thing. Now, this is a 15-minute chart, so that actually took 45 minutes, but it happened quickly. That's the key here. Now remember, guys, 3-bar plays, you can use these on any time frame you want. I mean, close your eyes. If I deleted the bottom of the screen here, right? If I deleted this where it says 9:30, 11:30, 1:30, 3:30, you wouldn't know if that's a 1-minute chart, a 2-minute chart, a daily chart, a weekly chart. You wouldn't know. They're valid and viable on any and all time frame. Wide range igniting bar on volume breaks below support. It needs a little bit of a resting period. Why? Because the bar is so potent, it's so big. Resting period, continuation move. It's beautiful. And they're so simple, right? They're so simple. Okay? Here's an example of one. It breaks above $1.40. Notice, guys, I've given you an example of like a $50 stock. I've given you an example of a $300 stock. And I also am giving you an example of a $1 stock. Notice I've given you a 15-minute chart, a 5-minute chart, 2-minute chart. See the flexibility here? They're valid and viable on any time frame, on any price. Same concept, okay? Wide range green bar, narrow range red bar, blast off. Right, so you're in this stock right around $1.80, $1.90, give or take. Stop's $1.60, so you have a 20 to 30 cent stop loss. The first 5-minute bar immediately pops about 40 cents. That's exactly what you want to see. Then a little pullback is okay. If the first bar has ripped, a small pullback is fine. Moves higher, pulls back. Guys, in an hour, you're up almost $1 on this thing. That's a $1 stock. You're almost 100%. At the end of the day, this thing's at $4.60. Instant gratification, simple, straightforward trade. Wide bar, narrow bar, blast off. Could have added on the pullback if you want. Now, let's take a look at some actual recent examples, relatively recent examples. Okay? UPS. All right? From, I don't know, a few weeks ago. UPS. We get a gap up. So the resistance is all down here at 102. It's all down here at 102. Gaps up. Puts in a bottoming tail. There's our wide range green bar. Our narrow range bar right here. We're in at 106. Our stop is just above 105, and you're at 108. That's over 2 to 1 in a matter of 30 minutes. There is my P&L, okay? You can see I made over $500 on this thing, and I got out too soon, right? Over $500 on this, and I got out too soon. Okay? If I held this to full target, it should have been a $700 or $800 winner. All day long. Right? Right at there. 108. If you want 2 to 1, you need $1.50. You need 107.50. I was getting out at 107.04. I was getting out about 30, 40 cents early. $500. Not bad. Okay? Let's try it again. Let's try it again on the short side to show you guys it's viable and valid on all time frames and long or short. Okay? So what do we have? AIG here. Okay? Gap down, wide range red bar, narrow range resting bar, narrow range resting. Remember, it can be 3 or 4 bars and then drop. So 41.45 is the entry, 41.75 is the stop. Another $500 winner, guys, right there in AIG. Look at it. Wide bar, couple narrow bars drop. Okay? And there it is. That wasn't even that long ago. Heck, that's 10 days ago. Okay? And you can see that the Cisco trade that was a loser was losing up here. We ended up getting out for plus $30 on that. But again, wide bar, couple narrow bars, continuation drop. Keep it simple. Keep it simple. Now, I put this one in here, guys, because there's variations sometimes, right? Notice here you have a gap up over resistance. You have a red bar and then a green bar engulfing. You could argue that that's almost a 3-bar play at 188. You could argue that. But I looked at this as more of a 1-minute breakout. And I called it in the chat room. You can see it right here. 942, Goldman Sachs, 187.65 by 186.65, $1 stop. Okay? So I looked at it as more of a 1-minute breakout. But you could have argued it's a 3-bar play. $728 later. Beautiful. Right? $728 later. Does not have to be so difficult. And by the way, that's a 3-minute trade. 1 minute, 2 minutes, 3 minutes. 3 minutes to make $700. Okay? Here's another example. Gap down. Notice up here on the 5-minute. See the green line here. You are under all support at 267. See it right there. You are under all support at 267. So once we get under 267, our job, find an entry. Somehow, some way, wait for a pattern, look for a pattern, find an entry pattern. Find an entry pattern. Okay? Boom. 2-minute UNH. Wide bar, 2 narrow bars. 265 by 266. Guys, there it is in the chat log. UNH, 265 by 266. Okay? That target was actually, yeah, that's the correct target. That's the correct target. Guys, made $878 on this thing. Okay? $878 on this. I just happened to take a picture when I was up 750 on it. In 2, 4, 6, 8, 10, about 12, 13 minutes. But here's the key. Look at the 1 minute. It immediately worked. It didn't chop around. It immediately dropped. Okay? That is how you trade. You keep it simple. You demand quality. You demand excellence, but you keep it simple. Why do I love the 3-bar play so much? Because it's simple and it's instant gratification. Those are 2 things I like to keep in my trading. Okay? Now, a couple more, guys. Can you make money? I get this all the time. I don't want to spend too much time on the topic. Can traders make money shooting for 1-to-1 and 2-to-1 targets? The simple answer is yes. 1-to-1 targets are not easy. Okay? 1-to-1 targets are not easy. 2-to-1 targets, you should be able to make money all day long. All day long on 2-to-1 targets, guys. Okay? And you could see that back here, for example. We were just on this slide. That's a 2-to-1 target, right? $878 is just about 2-to-1 on that. Okay? It's just about. All right? 1-to-1 target's different story. Okay, so we just talked about the 3-bar play. Little refresher here. Just a little refresher, rules refresher. Wide bar, narrow bar. Bar number 3 is your entry bar. Make sure the wide range bar is breaking above resistance. Little refresher. First bar, 15 minutes. Guys, you're up almost 4-to-1 on this. But you can get out sooner if you want. All right, you could sell it for 1-to-1 or 2-to-1. But the 1-to-1, the problem with 1-to-1 is that you cannot take full stops. If you take a full stop, you're break even. You don't want that. You want to be able to bat 50% and still make money. Right? You want to be able to bat 50% and still make money. All right? Wide bar, narrow bar, blast off. Now this one popped quick, about 70 cents, but it was still a 2-to-1 trade. 2-to-1 exactly would have been $1,000. Instead, I made $930. Okay? Same deal here. All right? 2-to-1. Guys, you can make good money with 2-to-1 targets. All right? Entry 230, stop 229. $1.86. This was about a $700 risk. So I made almost 2 to 1 on this, right? Made about exactly 1.86, okay? But it went a lot higher than that. It went to 236. You could have made 6 to 1, right? You could have made 6 to 1. But 2 to 1 should be enough to make decent money, guys. 1 to 1 is going to be more challenging, okay? 1 to 1 is going to be more challenging, all right? These are some of the ones I put on social media, guys, all right? Wide bar, narrow bar, blast off. On the long side, wide bar, narrow bar, blast off. On the short side, AIG and IVC. Unwall called this one. I called this one. Same play. His was long. Mine was short. Guys, it's right out of the book. It's right out of the textbook. Okay? Right out of the textbook. So here's the thing with regard to management, guys. And I'm going to go back a couple slides in just a second. Here's the thing. There is no Holy Grail. There is no one-all, be-all management. Everybody's different. When I say every trader is different, every person is different. You cannot expect to be the same as somebody else. Okay? Now, I understand that there's a lot of temptation to do that. Why is there temptation? There is temptation because you see a successful trader and you go, I want to be like him. I want to be like her. I want to be like them. But what if you're not them? Does that mean that you have to give up trading? No, not at all. Not in any way, shape, or form. No. You can still be a great trader, but you might need a slightly different approach. You might be able to take 3-bar plays just like your favorite professional trader, but you might have to manage differently. Perhaps that trader shoots for 3 to 1 targets, but you don't have the patience for 3 to 1, so you're going to shoot for 2 to 1, right? No one style is perfect for everybody. You need to find the style that is perfect for you, best for you, right? So find a management strategy that complements your personality style yet still makes money. You know what you're good at and what you're not good at. I know we like to lie to ourselves and we like to think we're better than we actually are, but at the end of the day, we know what we're good and bad at, okay? It's a give and take. The whole thing's a give and take, okay? Focus on the style you can actually follow. It's really hard, guys, to be perfect. What I mean by that is a really high batting average and a high Sharpe ratio, right? A high win-loss ratio. It's almost impossible to get that, okay? For most traders, I think a hybrid is probably a really good approach. Sell a little bit early on. Why? Takes the edge off. Little something about Mary type thing. For those of you who know, you know what I'm talking about. Takes the edge off. And then it makes it a lot easier to get your back half to target. So let me give you an example. When I swing trade, I usually take some about a third off between 1 and 2R. Now remember, swing trades are for big targets. Now why do I do it? Takes the edge off. Now I can let the back 2/3 go. And if it goes, I still have 2/3 left to make big money. If it doesn't go, I'm going to probably be break even on the trade. If it gaps against me, I'm not going to lose that much. So on a swing trade, I usually take 1/3 off early on, usually 1.5, 2R. And then I let the back go for 4, 5, 6, 10R. Okay? Our Roku trade, we're in at $44.50. It's at $67. We're still in it. I did take 1/3 off early though, right around $50. Right? Early. Take the edge off. Holy Grail, guys, is what works best for you. Okay? It's what works best for you. Okay? So I was going to get into a little bit of pre-market charts and things like that, but I'm not going to, guys. But I do want to show you one thing. Some of you have seen it before. Okay? You don't have to have a lot of money to make money. But when I did this, and this was years ago, I made the 2,389% on a $2,165 account. But I've been trading for 10 years, guys. 9, 10 years at that point. I wasn't a new trader. A new trader is not going to do that. Right? You're not going to take $2,100 and turn it into 51 grand. You're not going to do it. Over here, okay? Here's some more. 4,000% over here. 2,300%. Every single one of these was done with at least 8 years of trading experience. Why am I telling you this? Shouldn't I just be sitting there stroking myself, telling you how I made 4,000%? No, because that would be lying to you. You're not going to do this in your first 3 to 5 years of trading. And first of all, why would you want to, right? I did this because we had a prop firm at the time, and and the minimum investment, the minimum buy-in was $2,000. So I said, you know what? Got a lot of emails. You can't make money with $2,000. No, you can. You can. It's just really hard. Really hard. 2,200 into 99,000. You absolutely can make money, but I don't recommend it because trading's hard enough. Why do you want to make it that much harder? Even 13 grand. It's not that much money. Guys, how many businesses do you know that you can start for 2 grand, 10 grand, 13 grand? Not that many. Not that many. You want to go open up a Subway, cost you $150,000 to $200,000. You know what they make? 50 to 60 grand a year. That's not that good, right? You want to go open up a Chick-fil-A, $1 to $2 million, $1.5 million. I love Chick-fil-A, by the way. What do they make? 200 to 300 grand a year. Do you see where I'm getting at with this? You're making about 20% a year of your initial investment, maybe 30, in any, quote, normal business. But yet we're talking about 4,000%. You know how absurd this is? Yes, it can be done. It's not easy. It's not normal. You shouldn't be striving for that. You should be striving in a retail account with 30 grand, 40 grand, 50 grand. You should be striving to make 100% a year at 1% risk. If you can make 200%, you're a rock star. So do the math. You have a $50,000 account. You're risking 1% per trade. That's $500 per trade, assuming you have experience, because new traders risk $10 per trade, right? So $500 a trade. Your goal should be to make 100 grand that year. Your goal should be to make $100,000 that year. Yes, guys, I know. I know you've been out there on Google. I know you've seen the advertisements because I've seen them. Look at so-and-so. He took $500 and in 60 days turned it into $150,000. No, he didn't. He's lying to you. Okay? Because it's so easy to do. Your goal should be to have $25,000 to $50,000 in your trading account. If you have less than that, you're probably ill-prepared for this business. I know that's not what people want to hear, but it's true. And your goal should be to make 100 to 200% a year. 1 to 200% a year. Now, for those of you that think that that's absurd and I'm crazy and there's no way you could ever have $40,000 or $50,000, or how can you make money on 50, 100, 200% a year? Those of you think I'm really absurd. Okay, hold on a second. Hold on a second. Give me 1 second, guys. I'm going to do this in real time. Okay. I'm going to do it in real time. I'm going to pull this across the screen. This is for all the people out there that think this is absurd. Okay? You all think it's absurd. Okay? All right. What are we going to do here? What are we going to do? We're going to take $50,000. We're going to give you 10 years. And we're going to grow at 50%. This is making 50% a year. It's $25,000. You ready? Blow your mind. Ho, 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 ho! Blow your mind, didn't I? Oh, yeah. 50% return every year sucks. That's terrible. Who are you people? Who are you guys? Oh my God, let's humor ourselves and turn into 100. If you could compound 100% a year, for 10 years you'd have $51 million on a $50,000 account. Who are you people? Saying 50% a year is not good. Who are you people? I understand you have living expenses. I get it. So if you make 100%, put 50% back in. So next year, your $50,000 account is now $75,000. Now, I understand it's not easy to live on $25,000, but you understand the example that I'm getting at. So now next year you have $75,000. Instead of a $500 risk per trade, you now have a $750 risk per trade. Make another 100%, your $75,000 is $150,000. Now you can take half of that. 35 grand, give or take, 37 grand, whatever it is. Add that to your 75,000. Now your 75,000 is about 110,000, give or take. Now your risk is $1,100 per trade. Now you make another 100%. Now you have $220,000. Okay? But you're going to take some of that to live off. You're going to take, I don't know, what's that, 110 grand, take 55,000 to live off of. So now your $110,000 account's $165,000. We're starting year 4 now. We're starting. That's 3 years in. Now you can risk $1,600 per trade. You make 100%, you made $165,000 that year. You're going to live on half. Take 80,000, 82,000, whatever. You're going to add it to your 160,000. You're at almost 250 grand. By the 5-year mark, your 50,000 is 250,000. And now you can risk 2,500. Now you see after year 5 how exponential this gets. Don't tell me that 100% return is garbage. I don't want to hear it. Just don't want to hear it. Okay? Problem is doing it year after year. Most of you guys, you're shooting for that Holy Grail. You're listening to a bunch of charlatans on the internet telling you can turn nothing into millions. No. 30, 40, 50 grand is what you should be starting with. I'm not saying you can't start with 5 or 10. I'm just saying it's much, much more challenging. Okay? So guys, next time I'll get into the pre-market stuff. I wanted to go over a little bit of some of these pre-market charts. This, and this. But I'll do that next time. Okay, guys? So here's something to leave you with. Don't trade above your experience level. That means don't get caught up in what your neighbors or your friends are doing. All right? If you don't have experience and you're not making money, risk $10 per trade. End of discussion. Don't argue with me about it. Okay? Don't overtrade or revenge trade. Okay? More trades are not always better. I should say more trades are not, right? I said is not. Don't marry a stock or a bias. Resist the urge to, quote, make your money back after starting off poorly. The need to be right is a bad, bad thing. Always be objective. All right? Generally speaking, guys, money isn't the problem, but most traders make it the problem, right? Money really isn't the big problem, but you guys make it the problem by not being objective, by trading above your experience level. Okay? So I hope you guys enjoyed that lesson. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.